Hello, it's midweek. Welcome to Business Live. Coming up in this edition, ratings agency Fitch warns that huge losses imposed on bondholders and that the domestic debt exchange program has significantly weakened the banking sector's capitalization. Also in this bulletin, MTN loses almost 5 million subscribers due to SIM re-registration exercise ending June this year, but projects worse decline in second half of 2023. Thanks so much for your company. I am Pius Kojo Baka. Let's now settle for the details. And telecommunication giant MTN has recorded some significant loss in its subscriber numbers for the first half of this year. The telecom player puts the loss at almost 5 million subscribers ending June this year due to the SIM re-registration exercise. There is more for you in this report.
The significant loss puts the current subscriber base of MTN at 27.3 million. Ending June this year. MTN in its financial accounts for half year noted that as part of the regulatory directive, it was required to deactivate 5.4 million SIMs by the end of May this year. However, based on the extension, more than 400,000 had their lines restored. MTN was, however, quick to add that the full impact of this disconnection exercise will be felt in the last half of this year. The financials also revealed that data and mobile money continues to be the major driver of MTN's record profit for the first half of this year. The total number of mobile money accounts for half year stood at 14.2 million, whilst active data subscribers was 14.1, ending June this year.
Now, ratings agency Fitch has warned that the huge losses imposed on bondholders under the domestic debt exchange program has significantly weakened the banking sector's capitalization. According to the UK-based firm, the restructuring of outstanding sovereign debt and impending loan quality problems will add to capital pressures. There is more in this report.
Fitch considers solvency issues to be concentrated at the domestic banks. It said regional and foreign banks are better because of their strong buffers. The UK-based firm has earlier said that Ghanaian banks' capital was still weakening significantly as a result of Ghana's sovereign domestic debt restructuring. It further said, estimated that the country's current account deficit will narrow to 0.8% in relation to the size of the economy in 2023 from 2.1% in 2022. This is supported by suspension of external debt service and improved terms of trade. In 2024 and 2025, the capital account deficit, it said, should remain moderate. A reduced current account deficit together with international financial institutions, disbursement and external debt restructuring should enable accumulation of reserves over 2023 and 2025, reaching 2.8 months of current external payments by 2025.
All right, so let's expand on this further. Let's go on Zoom and speak to economist Dr. Patrick Owusu on this very issue. Pleasure you could join me, sir, on Business Live. Now, do you hold the view that banks really are going to struggle to meet any attempt to increase their capital requirement as a result of the domestic debt exchange program?
Good evening and good evening to viewers. Thanks for having me. Yes, I think that, if there's any immediate increment in the capital requirement, there will be a little bit of struggle for some of the banks. There's no two ways that the domestic debt exchange has weakened the banks in some sense, but also, it's not just what was closed in the exchange that was closed back in February. We know that new debt exchange is being mooted by the government, and you get a sense that all of this will bring further weaknesses within the banking system.
And I guess this will affect the ability to lend to critical sectors of the economy to help in economic growth.
Yes, absolutely. I think we've kind of seen that already. I think when the Bank of Ghana released the data in relation to the last MPC meeting, we do see that credit growth to the private sector has more than about halved. I mean, compared to the previous year. So we've already seen that impact on the credit to the private sector is being manifest within the economy already.
And again, we've seen the Bank of Ghana itself make losses of about 60 billion cedis. What will be the effect on the central bank lending to commercial banks going forward?
I don't really think that particular loss will significantly impact its ability to manage the financial system, whether through overnight lending or not. I think, we have to understand that where this loss has come from. It is because, the central bank had to absorb a lot more deeper losses from the domestic debt exchange, as the bank has explained, whereas the ordinary Ghanaians and other institutions, they didn't really see a cut in their principals. The Bank of Ghana had to take a huge cut in the principals, in addition to, other losses. So I think we really need to understand where the losses have come from. It didn't really come from the normal operation of the Bank of Ghana. It's just that extraordinary things have happened in the economy. And we also have to understand that the Bank of Ghana doesn't have to lend. It doesn't lend to the banks from its profits. It is a central bank. It doesn't work like other banks. So while the extent of the loss is huge, I think in the scheme of things, it's likely to be a one-off event. And in that case, it really shouldn't affect the ability of the central bank to perform its functions as a banker to the banks.
Again, do you hold the view that the 60 billion cedis loss of the central bank could again affect its duties like banking supervision?
Not really. I think if this was something that happens, if this continues, then it's going to start eroding the credibility of the central bank. Mm-hmm. But to the extent that this is likely to be a one-off event following from a quite extraordinary event that we haven't seen in our country, since I've been an adult, to the extent that it's just a one-time event, you really shouldn't see it. Don't forget that the banks have to follow specific rules. Those rules are set, and the Bank of Ghana has to ensure that they are following. So, again, I wouldn't see that as to the extent as a one-off event. I shouldn't expect that it should affect the ability to enforce the rules that are, enshrined in the country's laws. So I don't think that would be a problem. They will begin to suffer credibility issues if this becomes persistent. And also, we don't see that this is necessarily a result of mismanagement on the part of the central bank. It's just that, again, with a general oversight of ensuring that the financial system is sound, you see it makes sense that it absorbs a lot of the losses from the domestic debt exchange so that the banks will remain relatively sound.
I see. Dr. Suman, some are of the view that there should be sanctions against the Bank of Ghana itself if it overlends to government. Do you hold that same view?
I think, the issue about the central bank and the extent of the lending that they gave to the government the last time, I think that one is quite problematic. I think it's problematic in the sense that excessive lending has, that contributed to the inflation that we are seeing. And the Bank of Ghana has now had to hike the policy rate to fight this inflation. So I think that one is a problem. But then again, we already have the law that imposes the restriction. I guess people will make the argument that these were extraordinary times. But then again, we have to have a clear guidelines on under what conditions and under what circumstances maybe the central bank may have to step in. I think last year, to the extent that it was an extraordinary year, I mean, I think the extent of the central bank lending to the government was a little bit on the high side. It was quite problematic.
I see.
Considering that we subsequently have to take corrective measures, which is going to impose hardships on ordinary businesses and Ghanaians.
Very well. Thank you very much, Dr. Patrick Owusu, for your time here on Business Live, sharing your perspective with us on that matter. Let's move on to some other stories. And the Project Management Institute of Ghana and the Ghana Institute of Management and Public Administration have signed a memorandum of understanding to enhance the practice of project management among young graduates. According to the president of the Project Management Institute, Frank Owusu Asamoah, the collaboration will help address the skills gap needed in industries. The Memorandum of Understanding signed by the Project Management Institute and the Ghana Institute of Management and Public Administration is aimed at elevating the standards of project management practice in Ghana. It will also help to instill practical industrial values in students. In an interview with Joy Business, President of the Institute, Frank Owusu Asamoah, said his outfit is committed to bridging the skills gap in the society.
Project Management Institute is also a research-based organization where we don't just come out with reviews of our documents or our material, but we conduct a lot of research. Recently, what we call the talent gap came out that within the next few years, that is by 2030, Africa alone is going to need 25 million project managers. And this is research-based. So everything we do is towards addressing that kind of gap that exists.
Rector of the Ghana Institute of Management and Public Administration, Kweku Bonso, said the collaboration will help the school to produce students equipped with skills needed by industry.
The direct benefit is the quality of students that we produce. And the quality of students that we produce, not just for us, because the students, when they leave, are not really working for us, but are working for the country. So that we'll have better qualified students. Our students are going to be adequately prepared to go into industry almost immediately after they are done.
The Project Management Institute pledged their continuous support to the school. Young graduates from the Emerging Public Leaders Initiative have been proffering some modification to the way businesses are conducted in the public sector. Their suggestions are outcomes a corporate governance coaching afforded them by key personalities from the Public Services Commission. The initiative is also a screening for their potential recruitment into the public service sector. Country Director of the EPL, Juliet Asamoah, made this known to Joy News during the closing ceremony of the 5th Public Sector Cohort Orientation. Here's more.
The quest to improve efficiency in the public sector has given birth to emerging public leaders with support from the MasterCard Foundation to inject some dynamism into the public service. The 5th batch has concluded its training and is ready to start work at some various state enterprises in the country. According to the Country Director, Juliet Asamoah, time has come for the youth to be given the chance to make a positive mark in the public service.
We have now gone on to do further surveys to see how their journeys have been. And their supervisors within the sector will tell you that they do see change. They see a difference in the way that our EPL fellows work, they approach work. They have a can-do attitude. They're always thinking about innovation. They're thinking about giving their all. They're passionate. They come to work on time. When they're faced with ethical dilemmas, they're able to take great decisions, and overall they're more resilient than the average graduate who has not come through our program. So I do think that we're making some change. It's not big, hairy, audacious changes, but you do see incremental changes, and we're hoping that long term, rather than short to medium term, we will see the change that we want to see.
Lead for Transition at MasterCard Foundation, Sylvia Kuchibe, has also been explaining the scope of the initiative.
This partnership allows us to recruit a cohort of 550 young people in Ghana, Liberia, and a few other African countries to put them through a public service fellowship. The whole aim is to cultivate a new generation of public sector leaders, basically, and make sure that young people are in the public spaces and the spaces where decisions are being taken, and their leadership is also being nurtured so that in future they can take up the reins of public service and lead in various spheres of life.
Some of the beneficiaries have been sharing their experiences with Joy News.
We have learned to act ethically, think critically, and drive change in our various communities. No matter how small it is, we've learned from time management how to think critically about policies that affect change and bring about sustainability. We've also been taught about collaboration, teamwork, which is very essential. A lot of people complain that in the public sector it's all about one man takes all. But here we have been groomed and we are actually going into our various workplaces to be impactful people, to be change drivers, to be the ones that are actually the future.
We were instilled some values, we were instilled some soft skills, we were instilled some technical skills as well, which is going to make us very valuable, it's going to make us a valuable asset in the public sector space. And all these soft skills, hard skills that we've learned is something that's not just going to stick with us, but we are meant to disperse, we are meant to come into contact with people in the public sector and make sure that they are influenced by our values, and then it continues spreading, and then very soon we'll have a very not perfect but near perfect public sector, which is a very effective one. Thank you very much.
Leadership roles.
You're still watching Business Live here with me, Pius Kojo Baka. We've got great stories coming up for you after this break. And that's our part company here on Business Live. I am Pius Kojo Baka. See you tomorrow. Bye.